Run it, I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi, and welcome to The Conscious Day Trader. I am Yanis, and today we're going to break down another DAX trade from the London Open ICT 2022 Mentorship. And this is the day after my wedding, so it was quite a successful day, 419, closing the week on a $2,000 profit and a little bit more. And we're having the best month that I've had. 2023 is looking good. We're closing in 7,000 profit. This is on the funded account for the 5%ers. And as always, we're going to jump onto the trading view, which we're going to break down my entry, my exit, and how I manage the trade, why I went both sides on the DAX, shorting it for the first stage and then longing it for the second trade. And what we'll do, we'll just break it down as we always do, and we're going to start with the previous day of the daily high and the daily low. As you can see, I have these lines always, and what I tend to do is use the magnet and drag them for the next day. So tomorrow, if this was the next day, I would just drag it down to that highest point there. And I've also put in the fair value gaps from the big move that we can see started back in the 2nd of January. So the DAX has been flying up. This is the DAX 40, in case you're on the DAX 30 and you see different numbers. So it's been going up and it created a close to an equal high around the area of the 15264. And if we look onto the right side and we drag a line just to see where did it stop, it failed to break these areas here that we were discussing. If you remember my previous DAX trade, you'll remember that we were saying there was not a clear target for algorithmically that the market would want to go and take out. And what I mean by clear target, you can see it here. If I hover over this, or even if we put a line on, you can see equal highs here. These are areas that the market will want to tract, and an equal high there. Tract and take that liquidity, buy side liquidity above here. If I take the magnet out, what we'll see is above this area, we have buy side liquidity, which means the recreational traders will set up their stops there. And I'm going to repeat this over and over again because it's really important with ICT trading, identifying areas where the market will want to go and take out liquidity. And one area was this, and the other area was top here, these two highs. This is another area of buy side liquidity. Like this. We are going to talk, someone commented in one of the YouTube videos and said, can you show me, explain a little bit about how you determine a swing high and a swing low in the trade or when you're on the lower time frames. And we're going to do this today. And that was obviously the target of the buy side liquidity. As you can see, if we extend these areas here has been taken out. And over there, and the other thing is, where is the next target of the trade? So as we can see, the next highs, swing highs on the daily, where this move down, which started back in the 5th of January 2022, so quite a while back. If we take a line, trend line, this has been pushing down heavily and creating equal highs on the top here, which the market will want to come and take out. And this here, you would label it as buy side liquidity. Now, this is very far away. So we're talking about a year's data now. Is the market going to be targeting that area in the future? Possibly. Is it going to happen in the next daily candles? Not. The market, we'll see, is starting to retrace. And this is where you're creating your bias. Is the next candle of the day going to be long or short? And as we can see, we've had this huge move here. If you want, for the scruffy people that follow me, that is going to be your Fibonacci up to that point there. and we're going to see now that it's retraced and found the level on the 23.6. As you can see, it's also a fair value gap. So for this to continue lower, we'd want to see a clear break of the 23, rebounce back to the 23 and continue lower. Now, if you're on the ICT, what you would want to see is the market pushing, filling these fair value gaps, going higher, creating a swing low and a convincing swing low for it to come and fill the fair value gaps on the lower side. This will make more sense when we break down the trade from today. So let's take out these moves because they've already been taken out, that buy side liquidity, and let's see why we took the positions that we took. If I show you on the quickly on the actual trades, you can see that we have a long position for $305 and a short position for a 113. This is on a one lot size, which means every pip is $10. So $100 will be 10 pips, $300 will be 30 pips. So a total of trade of 40 pips, which is quite easily done on the DAX, but it's actually it's an achievable daily target. You're not looking for the 100 pips and so on. Obviously, if you have a bigger lot size, that is a lot more money, but the risk increases as you increase the lot size if you get the trade wrong. That's where your management needs to come in. So let's go into the trade. We have our daily high and we have our daily low. We're going to drop onto the 15-minute, and as we know with any ICT trading, time is very crucial. And that's why you see the boxes here. This is the previous New York session. The non-box would be the Asian session, which we see a continuation push up into this fair value gap on the left side here. These gray areas here are fair value gaps from that have still to be filled on the downside. This is the previous daily high, so the move has been on the downside, created the previous daily low, and then we had that retracement which we traded upwards last trade, and then we've got equilibrium. So the price created the daily low of the previous day and pushed up into equilibrium. Now, this gray area here is from a previous daily fair value gap. And as you can see, the market filled this fair value gap and pushed right up, excuse me, pushed right up into equilibrium. And then what did it do? It came back. Now, my thesis was that the next price, because we have a big fair value gap here that hasn't been sort of filled, and if you don't see that, I'll just put it on top. That fair value from wick, that wick there to that wick there, which will potentially come and be filled. We're currently in discounted area of equilibrium. So in an ideal world, you will want to see the previous daily low being broken, going long. If you're going short, previous daily high being broken and being at an premium price, which would mean being up on the top side of this equilibrium. So if we go back onto the 15-minute, I'll bring the replay and show you the beginning of the London session. This is the information we had. We were currently in a discounted area, but I was confident in terms of the bigger picture that the price was coming lower to fulfill this fair value gap. And that was why I was biased short in the morning for 10 pips during the London Open. And if we see, the price came down, gave me the 10 pips there, and then I was waiting for a better position to go long. And when did I find that position? We'll see on this area here. So my pricing, if we look at the long position, I entered at a 14,965. Let's just label that so you can see exactly where I went. 14,965. So this is the area here. Now, why did I enter? Because from the first move that we got our 10 pips down, we are now in a discounted area. And the price reacted when it hit that daily fair value gap. If we see how that looks in price action, and this is for the person who was asking me about the how to identify swing lows. If you bring on the 5 minute, you will see that you only have one swing of the price, right? So you have a down move and an up move. This area here, if we put a circle around it, this here, that will be the magnet, let's take that out. So that move there is a swing low, okay? So if you're saying that we wanted to break the intermediate swing low, that would have to break this move lower. Now, this, however, has multiple swings if you go at lower time frames. So it has, if we stay in that circle, you have this intermediate small swing low, swing high, sorry, and then a swing low here, swing high, swing low, swing high, and then broke higher. So this is where your ICT entry comes in. So what do we have? We have a pushing price down, came into fair value. Soon as it hit fair value, price went upwards and past the previous high on the left side. As you can see, these red candles, 3 green candles, creating a higher price than this one. And then it pushes back down, creating this swing low. The reason it created that swing low is normally to fulfill a fair value gap to the long side. So if we identify that fair value gap between this wick and that bottom of the candle here, let's make it the normal fair value gap that we have. It came back in, traded into that fair value gap, didn't fulfill it fully, but that would be your entry to go long. I missed this trade because I wasn't 100% sure that the price would go and fulfill the whole fair value gap. I wanted to see confirmation that this previous low on the left side, if we go on a 15 minute, was going to hold. And if you see, it also fulfills these fair value gaps on this move here. So I had certainty that this, even though I didn't get a fill in these areas here, I was comfortable that this price was coming upwards with heavy candles, green candles, continuous candles, breaking the previous high swings onto the upper side. That's why I entered there. Even someone could discuss that this is not a perfect ICT entry. I was happy if it broke down to kill the trade and wait for it to break the daily low before I get back into the trade. So I entered that for 30 pips. So I traded that all the way up to this area here. And obviously I could have held because I think that trade would have gone into equilibrium. Let's see what happened. So it went all the way down again. So I would have to wait for a bit of heat. As you can see, the blue line is my entry. And if we go all the way to the end, you will see that it never quite reached equilibrium. So I did take the top side of the 30 pips. Even if I hadn't closed the trade, I would have still been in this trade and potentially either closed for a loss if it came and broke this area here, which would have been, let's see how far, 27 pips, or I would have, it would have gone back to equilibrium. But I killed the trade because I hit my sort of target, which is $400 to $500 a day. I hope this makes sense. And about swing lows and swing highs, it's the easiest way to identify them is that, like ICT says, any price, if we zoom into a swing low, let's take this point here. The previous price needs to be higher and the right side needs to be higher as well. That's a swing low. The reverse is a swing high. So your right candle, this one, would be lower than the middle candle and the left candle would be lower than that candle, and that would create a swing high. Some people can just see it, some people need to hear it in terms of how does it actually make it work. So as you can see, this is the current price now, 12:30 in CET time. We have this fair value gap that hasn't been filled, and now we've created these equal highs here, which is a nice target for the price to come up to fill that fair value gap and go back to equilibrium. But as I discussed, I would only be trading this. Don't take this as advice. This is for educational purposes. And like in the beginning of the video, make sure you do your own analysis. Don't take any signals from this information. This is just for education and to create some content for you guys. So what we see next, the price going into fair value gap, either in equilibrium or filling the fair value gap on the bottom side if it breaks this area here. But as we said, we have outstanding business around this fair value gap, which also creates that buy side liquidity on the top of this area here. So it would be a nice target for the price to go to. I hope this has been helpful. I want you to quickly show you the trade sync, which I put all my journals. We're currently sitting on the best month I've ever had, 7,000 on the Fivers. I am being interviewed by Saul on Tuesday, so keep an eye on that one, on my bootcamp journey and how I'm trading their accounts. And we've still got this week here and a couple of days. So we've done 1, 4, 8, 12 days in the month, and we're running on 7,000. We'll see how it looks at the end of January. Trying to stay consistent, making that $400 to $500. As you can see this week, we averaged about $540 in 4 days. So super happy with that. If you want to use this trade sync, I also have a link that gives you a discount. Just drop me a message in the comments and I'll send it over if you want to use the similar stuff that I use. I'm a bit lazy with my journaling. With this, it's super easy. You just copy and paste your trades from MT5, upload it here, and it gives you a lot of information about your trades, how you can analyze your hours. So I find it really useful. And let's go back to our intro camera. And that would be it in terms of trade. Super happy with how it went. And this was the last one of the week. And I'll see you on Monday for another live trade. Post live trade, a few minutes after the trades close. ICT Trading 2022 mentorship. Also check out the Scruffy Trader, because he's one of the main reasons I've been consistent in trading, and I'm part of his Discord. You can find him as the Scruffy Trader on YouTube. Really, really nice guy, and he has been consistent for 15 years. So if you listen to this guy, you will also find the little nuggets that I've been, if you find things that are similar to what the Scruffy Trader says, is because I've had one-to-ones in the past and I see him as a mentor. So a brilliant guy, and make sure you like his videos because he creates also really good content. So catch you in the future. Make sure you subscribe and like this video, and I'll see you on Monday. Have a good weekend.
Run it, I can't take no loss.